Hello traders and welcome to another video review. Today is Friday, February 6, 2026. Let's take a look at the Forex economic calendar for today. So what do we have here? Data from the Japan household spending down from 2.9 to minus 2.6%. We got the data during the London session. German industrial production is scheduled for release at 8 o'clock. German trade balance is scheduled for release at 8 o'clock as well. Unemployment rate is scheduled for release at 8 o'clock. Mortgage rate from UK is scheduled for release at 11 o'clock. At 1 p.m. we got speech from the Bank of England member Peel. Average hourly earnings from USA together with the non-farm payrolls and unemployment rate are scheduled for release at 2:30 as well. Unemployment change from the Canada is scheduled for release at 2:30 as well. At 4 o'clock we got Michigan 1-year and 5-year inflation expectations together with the Michigan customer expectations and the Michigan customer sentiment. IV PMI is scheduled for release at from Canada is scheduled for release at 4 o'clock. Then we have a bunch of data from Russian Federation, and at the end of the day we got US Barker Hughes oil recount and total recount scheduled for release at 7 o'clock. So non-farm payroll Friday is here. Pretty much a good situation for all of the traders because the volatility is expected to increase these days. So without any further ado, let's switch to the charts and we start with euro dollar. So the euro dollar doesn't do much, to be honest with you guys. We've been consolidating around the technical support at 1.1820, 1.18. New low was made after this consolidation was after the movement to the upside was violated at the level of 1.1839. We went down towards the 1767. The momentum keeps moving to the upside. Nevertheless, right now the actual number is 44 points only. So as you can see, we went from the extremely overbought conditions down towards the level of 33 points, and then we're consolidating here with the momentum. We're consolidating here around the 100 PS moving average. Local technical support is 1.1767. So this is the very important technical support. We will see how this market will react once the non-farm payrolls is released. The situation on the cable is quite similar to the euro dollar. We have a time consuming and a quite deep movement to the downside in form of the WXYXZ complex corrective pattern. We went as low as 1.3507. So right now all of these levels will act as the technical resistance, especially the nearest level, which is 1.3584, and 1.3588 is 100 periods moving average. Momentum hits eventually the extremely oversold conditions, so the market is ready to move higher. Right now RSI is 37. Nevertheless, it looks like this situation here doesn't actually looks bullish whatsoever. So British pound keeps digging lower. Nevertheless, it looks like the correction might be completed, but we need a confirmation breakout above the wave Y low located at 1.3620. Then the movement to the upside is confirmed. So a US dollar versus the Japanese yen market has been rejected from the technical resistance at 157.35. Bearish engulfing pattern, little bit of the consolidation as we going lower from the extremely overbought condition. Right now we are still above the 100 periods moving average. Nevertheless, we have the first rejection of this very nice rally to the upside. The situation here is quite important because any breakout above 157.35 is obviously bullish. So please keep an eye on the current situation on the US dollar versus the Japanese yen. We stalled here and we don't know where to go. Gold goes down from 5,091, 5,090. We broke below the technical level of moving first below the 4,900, then we hit the level of 4,654. So we now below the 4,911 technical 100 periods moving average. So right now this level is the resistance. Momentum is negative. Nevertheless, the bulls are trying to move higher. You can see the spin bar here at the end of this correction to the downside. So that's the key to the upside here. This bar here. If we keep trading above this low here, 4,654, the outlook remains slightly bullish. Not too much bullish, but slightly bullish. Nevertheless, it looks for me like the first wave to the downside has been done. So let me see what I can do for you in terms of the scenario. So we got this all-time high here. This is the first impulsive leg to the downside. Maybe it's a wave A, or maybe it's a wave 1. This is the wave B to the upside. So it's counter corrective, right? It's a corrective counter trend movement to the upside. And now this situation here is getting a little bit more clearer, because it looks like we still need wave C to the downside, right? So if this is only 3-wave pullback, quite big one, it looks like the wave C is still not completed. So maybe this scenario is the correct one. If we break above wave B high, this scenario gets invalidated. And last but not least, the Bitcoin. We got massive sell-off yesterday on the Bitcoin as this divergence is getting wider and wider. We went as low as $60,000 on some exchanges. The price broke below 60,000 even. Now our situation with the momentum has been completely because of this massive movement to the downside has been complicated, and the momentum doesn't actually show any sort of the bullish divergence just yet. So we will place a regular line here for a regular level, which is the technical support at 60,000. If we switch to weekly, we have to analyze on weekly, guys. If we switch to weekly, you can see that this major technical support, now resistance, located at roughly around $75,000 has been lost. We went into this very wide area of the consolidation, very big down candle hit on a weekly, but we hit extremely oversold conditions on a weekly. Historically, there is a chance that we will stabilize this movement to the downside, and we will see some kind of a movement to the upside on the Bitcoin. This is daily time frame chart, way oversold. Unfortunately, there is no bullish divergence between this low and this low. As you can see, marginal new low on the RSI. Nevertheless, the market is extremely oversold, 16 points only. But the daily candle keeps looking very weak. Daily candle looks very weak. It's still green. Nevertheless, it is looking like anytime we can see new low on the Bitcoin. The current situation here is as expected. Let me just do one more thing here, because what I would like to point out is a possible target for the breakout from the triangle pattern or the channel pattern or F flag pattern. So let me just remove all of these levels here so we can have a clearer picture, because we don't need it anymore. There's a low chance that the Bitcoin will start off right towards the $100,000. So this is the situation. This is the flag pattern. All right. So in Fibonacci terms, if you want to see where we are going, where the bears are going, right? So this is the swing. This is the swing. This is the counter trend high, and you can see that 78% has been hit. Nevertheless, we need to place this line at the level of 51,991. This is the target for the one-to-one target of movement to the downside, flag pattern, triangle pattern, 100% movement to the downside. So this is the roughly around $52,000. All right, so that's a very important situation here if you want to consider the measurement from the flag. So if you don't know what we are talking about, let me just remind you guys, this used to be a very visible flag pattern. This used to be, and there was some sort of there you go, this is the second part of the flag pattern. It looks something like this, yeah, you know, but it didn't actually show. And the other situation here, the pole of the flag was here, right? So that's the situation here with the flag. So the flag looked like this, or the channel looked like this. We got some people call it F flag. This is reversed F flag. So the projected target is still $52,000. So that might not be the low for the movement to the downside if the market would be technical. Nevertheless, we are extremely oversold already, and this level is very important for the bulls, obviously. So that's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.